Dear traders, you are watching a recap of the Asian session. Geopolitical tensions near the Ukraine-Russia border have eased. The US stock market reversed upwards immediately after the news. The Asian stock indexes also added gains today. It seems that the risk appetite is creeping back to the market. Let's discuss the main highlights of the Asian session. Yesterday, the S&P 500 rose by 1.48%, while the US dollar index dipped versus its main rivals. As expected, the US dollar declined following a slowdown in the rally of the euro. Both currencies are vulnerable to the news on a rising inflation and the conflict between Russia and Ukraine. Now, many analysts believe that the military conflict is unlikely to occur. However, inflation continues to weigh on market sentiment. Yesterday, the US unveiled the Producer Price Index survey. In January, the figure totaled 1% versus the December reading of 0.2%. On the annual basis, it remained unchanged at 9.7%. As usual, expectations of rate hikes have increased even more. It's extremely bullish for the US dollar, so today the greenback extended gains, while the euro incurred losses. Now the US dollar index is trading at 95.85. It's expected to stay in the range of 95.60 and 96.20. The dollar-yen pair seems even more sensitive now to changes in the stock market. Yesterday, the yen shed losses following a rise in US stocks. It was even unable to take advantage of the US dollar's weakness. As a result, it declined by 5 pips. In the Asian session, the Nikkei 225 index climbed by 2.2%. This index helps the yen remain at the current levels. Besides, analysts reckon that the stock market demonstrated a short-term rise. Investors are unwilling to take risks and buy new stocks ahead of the Fed meeting scheduled for March. The regulator is widely expected to raise the key rate at that meeting. For this reason, the pair may fall to rise to the target level of 117.17. Yet, it's likely to approach the pivot level of 116.35. After that, the price may turn lower. It's likely to resume a medium-term decline if the price tumbles below yesterday's low of 115.27. If so, the quotes will continue to fall to the range of 113.33 and 116.35. If the price keeps rising, there might be an alternative scenario as well. Bear in mind that its implementation will go through certain stages and it bears significant risks. The pair needs to climb above the levels of 115.88 and 116.35. Now, there are only small signs of a growth on the chart. The pair is trading near 115.63 in the green zone. The Aussie also managed to advance by 24 pips following the greenback's decline of 0.31%. Today, the AUD-USD pair may either jump to the target level of 0.7227 or roll back to 0.7065. If the price holds below 0.7126, it will drop to 0.7065. The price may also consolidate above 0.7190. If so, it will be confirmation of an upward movement. On the daily chart, the curve is moving up. It has already reached the 0.7174 mark. If the pair resumes growth, it's highly likely to reach the upper limit of today's trading range of 0.7145 and 0.7177. And that's all for now. Keep close tabs on financial markets on InstaForex TV channel. Feel free to leave comments and ask questions. Do not miss our next video review. See you!